Today for U.S. growth in the first quarter. And the results were rather dim. Compared to the 3.1% rate of growth in the final quarter of last year, the GDP only rose at 1.8% in the first quarter of 2011. And if you consider that the economy has to grow at a rate of 2.5% just to create enough jobs to accommodate a growing population and more efficient workers, then that's not good news for unemployment. Now, a lot of economists, including Fed Chief Ben Bernanke, who gave his first ever press conference yesterday, are hedging their bets on this being temporary, transitory. The cold winter weather is over. Government spending, especially defense, is set to pick right back up. And the rise in gas and food prices? Yeah, Bernanke says not to worry too much about that either. So, are they right, or are they playing down what could be a much larger economic downturn? Joining me to discuss it is Peter Schiff, President and Chief Global Strategist of Euro-Pacific Capital. Peter, thanks so much for joining us tonight. What do you say here? Rising gas and food prices, inflation, is this all transitory? Is it going to fly away in a month or two, or do we have a much larger, much more long-term problem on our hands?
Absolutely not. In fact, the way you know it's not transitory is Ben Bernanke thinks it's transitory. And since he's always wrong, you can pretty much take it to the bank that inflation is going to get worse. You know, you mentioned earlier about the U.S. economy. When the data came out today that showed the economy grew by about 1.8%. But I don't think it grew at all. I think it contracted. I think that we're understating inflation. If you measure U.S. GDP in any other currency, measure it in the Swiss franc, measure it in the Aussie dollar, measure it in the euro, our economy is contracting. Measure it in gold, measure it in silver. I mean, it's going off the edge of a cliff if you measure GDP in silver. So I think the real economic activity is contracting. Inflation makes it look as if the economy is growing. That's not happening. And really all we're doing is spending more borrowed money. We're digging ourselves into a deeper hole. I'm afraid we may never get out of it.
Well, in that sense, if we look at rising gold prices, rising silver prices, like you said, there are a lot of murmurs out there that we could be seeing a collapse of the dollar coming up soon. You are the king of predictions here. What do you say?
I think the dollar will collapse. I mean, I think it could happen maybe as soon as this fall. But if it doesn't collapse in the fall, it will collapse soon. I mean, I think if you look at the charts, the dollar is weakening. And look at Ben Bernanke's press conference yesterday where he, abdicates any responsibility for inflation, for rising prices. He thinks that oil prices or other commodity prices are rising, and it has nothing to do with all the money that he's printing. And so that means he's just going to keep on printing more. And, the economy is actually going to weaken. Look, we got the weak GDP numbers today. We got a big jump in unemployment claims. So the employment landscape is getting worse. What's going to happen when real estate prices make new lows, which is coming soon? We get a new downturn. More people are unemployed. And energy prices keep rising. Food prices keep rising. What's the Fed going to do? I mean, the Fed is putting itself in a box where eventually inflation is going to be so bad that they're going to have to raise interest rates so substantially to tackle it that they're going to completely destroy the economy. But if that choice is too bad for the Fed, if instead they just let inflation run out of control because they don't want to raise rates, then it's worse.
Do you think that Ben Bernanke, you say that he's always wrong, but do you think that he really believes what he's saying, or that he really thinks he's telling people the truth? I mean, he did open himself up here, right, to be the first Fed chief ever to hold a press conference. But is he lying on purpose to try to calm people down, to try to calm the markets, allow Wall Street to keep doing what it's doing?
Well, he did a very good job of not answering any of the questions. I mean, if you actually saw the press conference, he skated around everything, but he never really gave a direct answer. So he just basically gave a speech interrupted by questions. And I think the reason he did that is because he's trying to get some credibility. But, I saw a report, I read a report on Bloomberg that actually described the press conference as a success because he didn't make any major gaffes. I mean, it wasn't a success at all. During the press conference, every time he opened his mouth, the dollar lost more value. Every time he spoke a syllable, gold went and hit a new record. I mean, it wasn't a success. I mean, unless you think the Titanic had a successful crossing, because a few of the passengers happened to make it to New York. I mean, this was a disaster of a press conference. And, and I think, if you see a big rally in gold, there's a good chance that Ben Bernanke is speaking somewhere.
That's good. I like that. You know, one of the other things that was attributed to either what the government is calling slow growth or what you're actually calling a retraction in the economy is that the fact that there was less government spending. Somehow, I guess there was less defense spending going on, although I don't really know how that's possible. But let's say the Congress right now does actually start making drastic budget cuts and they increase over the next couple months. Then should we just get used to these horrible numbers, get used to unemployment being as it is?
Well, look, if the government really made big spending cuts, that would be good for the economy. Because the more the government spends, the more the private sector can't invest. And that's what we need to grow the economy. We need more savings, more investment, more production, but we can't afford any of that because the government is spending all of our wealth. So if we really had big cuts in government spending, the economy would improve. The problem is that's not going to happen. And when they're talking about lower government spending in these GDP numbers, it's not actual lower spending. It's lower spending than maybe they had forecast. But the government is spending more. I mean, the government has never spent as much money as it's spending right now. That's the problem. And the bigger problem is the way they're financing it. They're not taxing us to pay for all this government. They're printing money to pay for all the government. So they're paying for government with inflation, which means everybody that owns dollars pays for it with higher prices and a diminished standard of living. And because so many other countries around the world are trying to peg their currency to the dollar, when we create inflation over here, we export it all around the world, and the whole world is suffering because of all this government spending.
Aye, Peter, you always make me feel so good about the direction that our country and the entire world is heading, but I guess that's the truth right there, isn't it? Thank you so much for